Welcome to a video that I'm sure whoever's clicked on this, you've been very interested in this topic, and everything you come across online. Number one, the guy who's speaking about it doesn't know what he's talking about. All he thinks is market makers are evil people. They've been out to get him, and that's mainly coming from people that continuously don't know what's going on in the market and they keep getting stopped out. So they come to the conclusion that market makers are after their stop loss. So in this video, I thought I would actually teach you what market making is, how market making actually happens within the market, what market makers are doing, because as retail traders, we are very undereducated. Me at one point, I didn't know anything about this. And with the information given online, some stuff is good, but majority is a lot of BS. So I thought I would take the time out of my day, make a video teaching you guys about market making and what actually happens within the market. So this video will, I don't know how long it'll be, but if you are interested in it, we will get into some really good stuff. So to start things off, which a lot of people have a lot of confusion with, market makers are not out there to hunt for your stop loss. That's the number one thing everyone needs to understand. The whole job of a market maker that we are going to get into in this next slide is to facilitate orders. So me teaching you this, I'm teaching you it from a retail trader. So me and you listening to this video, unless you're a bank trader or an actual market maker listening to this, but we are retail traders, so we are market users. We don't make the market. We don't price in where the GBP is going to be on the day that we want to trade it. No, we are market users. So with this, we can't make the market. We can somewhat try and get on side with what's actually happening, which I try to teach you guys, like obviously surface level stuff, but there's a lot more that goes into the markets when you finally understand what the bigger picture is. And once you can start to explain the what, why, when, how, all of this, that's truly when you'll understand day trading, because day trading is incredibly hard. Like, I'm not going to sit here and say it's very easy, you're all going to make money. No, I mean, you will make money, you might get lucky, whatever, but if you don't learn it the right way, if you don't approach it with a professional mindset, then I don't think a lot of you will last, or most people don't last in trading. That's why most people don't succeed in life. If becoming a millionaire, becoming a billionaire, if everything like that was so easy, why isn't everyone becoming one? Because nobody wants to put in the work. Trading is no different. Like, the upside to trading, there's no salary cap, there's nothing like that. So when people come into trading, they expect the money just to come in instantly without putting in the work. So going back to the topic of this video, going over the market making and everything like that, it ties in together with having a right approach to the markets, learning about the markets the right way. So why did I even mention all of that stuff, and why did I go on a tangent? This is because everyone deserves the right to being educated the right way to these markets. So that's what I'm trying to do in this video. So I'm not saying I'm some sort of expert on market making. I'm not saying I'm a market maker at all. I have done my studying. I spoke to real people that have been in institutions and stuff like that. That has cleared a lot of things for me, built my own trading strategies, scaled to multiple 5 figures in random trading sessions in a day, lost a lot of money in trading sessions in a day as well, but consistently being profitable. And that's the number one thing. And this was a core element to everything that we are going to get into with ICT's market maker models, because everything online is fluff. Half of the people don't even understand it, and no one can even define it. So if you can't define something, then you truly don't understand it at all. So now, most people have already clicked off this video. So if you're still listening into this video, you somewhat have an attention span which can take you pretty far in life, because most people probably heard me waffling for a few seconds and they were like, I can't do this, let me click off, and they just went scrolling back on TikTok. So that's what I'm about to say, why most people succeed in life and don't. But let me get back to this. So who are market makers, right? So market makers, their whole purpose is to facilitate orders. They're not there to hunt stop losses. They're not there to do anything like that you believe. Their whole purpose is to facilitate orders and mitigate orders as well. By nature, the hedges pretty much within the market. So in Forex and other asset classes, market makers exist at multiple different levels. So we have central banks. So while not traditional market makers, they influence liquidity through policy decisions and interventions. So when we have interest rate decisions, everything like that, the Bank of England, the Federal Reserve, and the Bank of Japan, they come in for certain news events and certain things within the market. Then we have interbank dealers, so major commercial banks like Barclays, JP Morgan Chase, and then we have liquidity providers or bank divisions that feed aggregated pricing to brokers, which is then passed on to me and you as retail traders. So that was a bit on market making. And then moving on to the other slide that I had for introduction to market making. The definition, the process of providing continuous bid and ask quotes to maintain market liquidity. So say for example, a bank or an institution wanted to put in an order for 100 million, right? They will facilitate, so if there was a buy order that they put in, they will facilitate that order by entering a sell order into the market. So that order gets executed pretty nicely. It doesn't cause any ruckus or whatever within the market, and it just gets executed to just very smoothly pretty much. And the core purpose is to ensure efficient trade executions and orderly markets. So that's pretty much it. You can think of them as like, I don't want to say a boss, it's nothing like that. They just overlook everything if it's running smoothly and everything like that. There's not just one market maker. There's hundreds and thousands of market makers around the world. They're normal people, I don't get where the idea of retail traders everyone just came to a conclusion that there's one market maker and he's out to get every single retail trader. Like, retail traders are down here. Like, they couldn't care less if you entered a position or not. So whatever your favorite marketing trading guy is telling you when you hit a stop loss or whatever, if you lose a trade, that trade is your fault. It's not the market's fault. It's not the market maker's fault. It's none of that. It's your fault. So take responsibility in trading. And then going on to this, the role of market makers. They provide liquidity, facilitate large institutional orders, and they support price discovery. So moving on to ICT's market maker models. So I know a lot of you have heard of ICT. You know about ICT in a circle trader. Michael has a good understanding of the market. He's, dare I say, one of the best educators for retail traders that's ever been about. So he's been trading for 30 years. So he knows his stuff. He knows what he's been around, and some of the logic he teaches is very good. So although he doesn't teach it all, because why would he? He doesn't owe anything to people online. So this is where I'll teach you about his market maker models and why they work, the actual definition behind them, and why did he come up with the term market maker models? Like, how does this even tie into market making? So us as retail traders, we trade on a whole different terminal and a whole different platform to market makers or people at an interbank level or people at an institutional level. Like, this is common knowledge. If you don't know that, then you got a bit of studying to do. But that's what we do. We trade on TradingView. That's where we do everything. But there's a whole different terminal for a whole different stuff that goes on within the markets. And this is where ICT came up with his term of the market maker model. So if I look right here, the definition of a market maker model is a mitigation of orders. So this is where orders will get mitigated within the market. So if I draw your attention to this green box, this is known as the original consolidation, right? Market consolidates, drops lower until it reaches an area of a point of reversal or a retracement. So this is where the facilitating of orders comes into play. So what did I tell you guys before? The whole job of a market maker is to facilitate orders. That's all they're there to do. So here, this is where the market consolidates. An institution puts in an order of 300 million short. selling this market. On the other side, someone has to buy this. So for every buyer, there's a seller. Every seller, there's a buyer. So here, this is where they will facilitate that order. Going all the way down, they're in a buy position from here. That order is being facilitated. They're in drawdown for this period of time. But as I said, by nature, they are hedgers. So they will continue looking for the market to the downside, facilitating the orders for the institution or whatever that wants to be short, and they're in a loss. Until we get to a point of a reversal and a retracement, orders get mitigated back right here. So the short that they were in, that gets mitigated out. They are buying all the way here. So eventually they come out on top profitable. They hardly ever lose, pretty much, quote unquote, right? So I don't want to say they'll lose altogether. There will be losses, but by nature, they are hedgers. They know how to manage their risk and they know how to approach the markets. And that's basically how ICT's market maker models come into play as a retail trader. So what is a market maker model? By definition, it's a mitigation of orders. And that's basically how it falls into market making itself. So once you pair this with the logic he's taught, that's where you get a pretty much a nice understanding of what's really going on within the market. And you'll have is mitigation blocks. That's where the term mitigation blocks even came in. So you can see real offset of orders going into the market. So if you have a footprint chart or an order flow chart, you can definitely see it on there. So that's where most of that takes place. So that was a bit on ICT's market maker model. So I do have a extended teaching on that, but Michael is one of the best educators out there for trading. He's the one that really got me into understanding the markets from an algorithmic lens, but also understanding the markets from why things go on, you know, that made me study more about time, why time is so important within the market. Because for me, I'm a retail trader, so I'm not the best trader in the world. I'm far from that, but I'm a trader that's consistent and makes money. So I found something that worked, and that was a variable that relied heavily on time. So this is where majority of things started for me. So moving on to the next slide, who are market makers, which I spoke about before. Central banks, policy-driven influences. So we spoke about the Bank of Japan, Bank of England, and the Bank of America. And then we have Tier 1 interbank dealers, JP Morgan, Barclays, and then UBS. And then we have liquidity providers connected to retail brokers. So like that's kind of how the food chain goes about, you know, retail traders, me and you, will always be at the bottom of the food chain. So I'm not saying I'm the most educated or the smartest person out there in the world. I'm not, but I have done my studying, and the studying has led me to a point of understanding the markets to a deeper lens, you know, and, you know, being able to help others around the world, which is great. So I thought this video would give you guys a bit of insight on what really goes on, you know, and clear up a bit of doubts, because trading is pretty difficult. And I know a lot of you have questions like in your mind getting into trading. What if the market makers are after me? What if this is happening? Like, I know I've been there. So I thought this video, basically I'm answering questions that I had at the start of my trading journey as well. So market making in different asset classes, equities, designated market makers on exchanges, futures, high frequency trading firms. So there is high frequency trading out there as well. And high frequency trading firms pay a lot of money for data, terminals, and stuff like that. This stuff is not cheap. These high frequency firms, they get access to price and data feed faster than us as retail traders. So they see price as it prints a millisecond faster sometimes. And if you've heard that, you're probably like, a millisecond faster? That's very quick. That's a big difference. That's a difference between millions and billions over a course of a year in trading. I'm sure that's not hit some of you enough. So trading is the one business where there's no cap on your money, but you have to be very switched on. You need to Have something that's solid within the market, so good within the market that you know exactly how it will form every day, and you're able to execute on that regardless, win or a loss. And that's where most humans fail as well. Human nature is to cut your winners short and let your losses run, pretty much. That's kind of human nature. And then trading is like the opposite. It's telling you, hold your winners. Psychologically, you see a lot of money, then you're down a lot of money. And it's like, that's the psychological battle that most traders fail with. And me teaching about market making, all that stuff is great. This is just additional information that you can utilize in your trading. But how far it'll take you, I don't know. It depends on what you wanted to gain in your trading career. So then Forex, we have decentralized interbank markets. So how market makers operate: two-sided quoting, bid and ask, spread capture, hedging inventory risk, and central bank influence in the Forex market. So the foreign exchange market, the euro, GBP, all of those currencies, policy decisions shaping liquidity, conditions, example, Bank of England in GBP, Fed in USD, BOJ in JPY. So basically, when it comes to trading Forex, in my opinion, the easiest way to trade the Forex market is trading the higher time frames. Like there's no question about it. So if you're a swing trader in Forex, you are going to do well. You're going to be able to capitalize on good moves, be able to hold good winners as well within the market. And anyone that trades Forex or wants to get into Forex, that's what I'd focus on. I don't trade the Forex market. I don't care about the Forex market. But those of you that do trade Forex, that's what I'd only focus on. I wouldn't care about the lower time frame at all, because there's no direct injection of liquidity or a time-based thing that happens unless you are trading 3 a.m. So this is all on New York time. Unless you're trading the London Open, then yes. But other than that, there's really nothing for Forex. I would stick on the higher time frame when it comes to that. So that's basically what I wanted to get into regarding market making, teaching you guys. This could be a part 1 series because I have to cut it short, have to go somewhere, but I hope you did get something from this. I will go over a few things if you do have any questions, but the whole purpose of this video was to teach you about what is the point of a market maker. Like, what does a market maker do? What markets are they in? So at the end of this, or if you made it this far into the video, you should be able to answer what a market maker is. Market makers are basically the backbone of the markets. They ensure liquidity and smooth order execution. So they're there to facilitate orders, so large trades, without, messing up the price or the value of the asset. The activity is driven by liquidity needs, not random market moves. So everyone just thinks the markets are random. The markets are not random. They trade with a clear purpose to keep the market liquid and balanced. The markets are efficient. I don't care what anyone tells you. The markets are efficient. So that's something that you should keep in the back of your mind as well as you go to build a trading model. Like, if you're listening to this as a retail trader, trading is going to be incredibly hard for you. If you're just starting out on your journey, it's going to be hard. You need to know exactly what to look for, how to do everything within the market. If you don't know that, then it's going to be very difficult for you to even survive in this business. So I'm going to leave you with this. As traders, our job is not to fight the market makers or anything like that. I always laugh when this comes about, like market makers are evil. It's like, I'm just thinking of traders with pitchforks and looking at some random people and going, you took my funded account from me. I hate you, grr. That's always what I think about when people think the market makers are hunting my stock. But our job as a trader is not to fight them, but to understand their behaviors and position ourselves with them, pretty much. Like, you're never going to be able to trade with their size or what they do or anything like that. I mean, I don't know, unless some of you become billionaires, then okay, there you go, you can. But we trade at a retail level. So what you'll be doing is you need to find what they do. Like, there's things that repeat within the market, especially with time. If you can align yourself accordingly with that, you have something that actually repeats and is tradable within the markets. And when you trade with liquidity, not against it, the market starts to make sense. So that should be the backbone of your trading too. Liquidity, understanding time, and understanding ranges. That's, for me as a retail trader, that's really what helped. understanding interest rates and commitment of trader data, all of that stuff also helps as well. So trading isn't just about waking up, pressing buy and sell. There's a lot more that goes into it. But I hope you did get something from this video, like I tried to kind of keep it short, giving you a bit of insights on market making and not overwhelming you with loads of random stuff, just giving you it to the point and going into a bit of detail on ICT's market maker models as well, because I'm sure a lot of you had questions. So I'll leave it with that. If you do have any questions, you can ask me in the comments down below. And with that being said, enjoy the rest of your day, wherever you are watching from in the world. And remember, I'm rooting for you and I hope you do find success in this business.